Hi guys, good afternoon and welcome to MF Corner. I'm Pavitra. With me is Sonal, and today we have a very interesting episode, Sonal. You know, we've been seeing a lot of these new categories of funds in recent times, or just, some pockets which are also picking up a lot. You have HDFC AMCs recently launched and first ever defense sector fund. There's the SBI Dividend Yield Fund, which got such big money. There's the Quant Business Cycle Fund. So, what do experts think of these? Are these good investment bets? Who are they best suited to? Let's try to cover as many of those as possible.
Oh yes, and we have just the perfect guest for that. We have Mrin Agarwal, who's the financial educator and director at FinSafe India, to tell our viewers whether the new categories or the new segments that we are seeing, is it interesting? Is that something that they should be looking at as well or not? Mrin, good afternoon. Thank you so much for joining us. Well, that's exactly the first question. HDFC AMC, as Pavitra was mentioning, just launched India's first ever defense sector fund. Thoughts on this, and would you recommend it to anybody who's looking to invest their money here?
Good afternoon, Pavitra and Sonal, and so nice to be here today on the show. Yes, there's been this flurry of NFOs, not only this year, I think for the past couple of years. Now, when we look at this defense sector fund, well, it basically invests in the defense and allied sector companies. So, for example, aerospace, shipbuilding, and allied services. Of course, it's a sector fund since it's concentrating only on the defense sector. When I went through the presentation, what I found is that I think there's a small subset of stocks that it is investing in. And of course, I think most of them are quite PSU oriented as well. And I think what works for the fund is that, certainly it's an area where there's a lot of focus from the government. Of course, you have the whole Make in India aspect as well. But again, the fact remains that there is going to be concentration in terms of the majority buyer, who is the government of India for any of these products and services, right? And of course, one of the other risk factors is the policy ramifications that you have, not only of the Indian government, but also from foreign governments as well. So I think it's a fund that is really meant for suave investors who understand what investing in defense sector is. And of course, it's under the high risk category, given that it is a sector fund. So I think it's really meant for investors who understand the sector, who want to take a risk in this sector. And of course, given that it is a sector fund, it is going to be very concentrated. And one has to really wait and watch how this particular theme works out.
Okay, that is understood. And, this is something we've been discussing anyway, right? That you should only get into sector funds if you perhaps have some amount of knowledge of the market. You cannot be a complete brand new investor and try to do this. But, Mrin, the other sort of problem that can be seen with sector funds is that in many cases, these stocks or sectors have already run up a lot when they come into focus. So, for example, all of the defense stocks have already moved up so much. What is the best way to approach these then? Do you think, like I was pointing out, it's a complete no-go for investors who are very new? Or do you think that they can consult their, a fund manager or something and then look at this kind of space, if they're looking to kind of generate higher alpha?
Well, actually, I don't really recommend sector funds or thematic funds, because I think in most of the cases, as you said, these funds come when these stocks have already run up quite a bit. And the other thing is that I think timing of entry and exit is very important in these particular sectors. So I think if you are planning to enter a sector fund or a thematic fund, so I think first is you need to be very clear about the fact that you're doing it because you understand this particular sector or this particular theme, and you fully also understand that the risk is going to be much higher. So obviously this is done as not the core allocation in your portfolio, but as a satellite allocation that you're doing, or like a tactical allocation that you're doing. And if you're doing this as a tactical allocation, you must also be clear about what is going to be your exit strategy in this fund, right? So again, I would just like to say that I think, with most sectors and themes, the high conviction ideas would in any case be available in the flexi cap funds, and take this concentrated exposure only if you really feel that this is a sector that's going to outperform and you believe in this particular sector or theme.
Oh yes, and it requires greater detail of research as well, right? As you said, it's very important to time the entry and the exit here. So of course, the due diligence increases in that case. That's about sector funds. Mrin, what about dividend yield funds? There's been a lot of talk about it. SBI Mutual Fund launched one last month. It did get a lot of attention and inflows as well. Is this an exciting space to be in, the value bet or the dividend yield bet?
Well, again, this is in some way a thematic fund because it's basically investing in companies that have got high dividend yields. So it is a thematic fund in that sense. And again, with dividend yield, yeah, it really depends what market cycle that you are in. Again, whether this is really going to be a best performer in the future is really difficult for anybody to predict. And again, when you look at themes, when you look at the past data on themes, you really don't see any one particular theme always being there right at the top, right? So whether it is value or growth, I mean, when you look at any theme, for example, you don't find any theme that has consistently been there right at the top. And, that's something that you have to be mindful of.
Okay, got that. I'm just going to ask you a slightly broader question as well on this entire dividend yield category. What do you think is the case for anyone? Okay, even if it's an experienced investor, what is the case for investing in this category over, say, a large cap fund or a PSU fund? And also, since a lot of these companies offer high dividend, these are normally PSUs and large caps, this can lead to a lot of concentration in your portfolio as well, right? So do you think this should also be perhaps a side bet that you take?
Yes, absolutely. So, of course, when you look at the dividend yield fund versus investing, let's say in a Nifty 50 fund, obviously the dividend yields are much higher in a dividend yield fund. But again, the problem with dividend yield is that it's concentrated, as you said, in large caps and in PSUs. And also when you actually look at the rolling returns as well, you don't find real outperformance, right? Over Nifty 50 itself, you're not really seeing outperformance. So you have to really think as to why you want to do this fund, because finally it all boils down to what returns you can generate in the long term. And I just feel that if you can do it with a Nifty 50 broad-based index, then why get into a specific concentrated category?
Okay, so concentrated category is not something you would say that people should be looking at as well. So that takes me to the next question, which is about Quant Mutual Fund announcing the launch of the Quant Business Cycle Fund. Again, very similar to thematic funds, but your thoughts on this category, how does it differ? What would the advantages or disadvantages be here? Because this is a category also which at times does take a lot of interest.
Yes, it does take a lot of interest, but somehow, I have not seen this category performing well. So there have been other business cycle funds that have got a fairly long-term performance as we see right now. And generally, if you see that, the performance has been quite wavering and there have been long periods of stagnation as well. I've not really found this to be a very exciting category personally, honestly, and never really recommended it to customers either, because I didn't really find it very interesting. Because honestly, again, accurately trying to identify the business cycle and then doing the relevant portfolio allocation is the key to this category working well. And again, I would say that in a broad-based portfolio, so if, for example, if you choose a flexi cap fund, in any case, I think these would be factors that a fund manager would be looking at when they are allocating, right? They would be looking at what is a good, what is the ensuing business cycle, and accordingly they would be allocating. Also, one of the other things is that these funds come with much, much higher expense ratios. So that's the other thing that doesn't work for the category.
Okay, and I think that's such an important point, right? That you can get exposure to so many of these names even through a different route. You don't have to go for a business cycle fund or a dividend yield fund. But Mrin, it's been a really useful chat so far. I'm going to take a short break and come back. We have to ask you about a lot of other categories as well. What do you think of gold, mid caps, small caps? So the rest of this chat coming up in just a bit.
Welcome back to Mutual Fund Corner. We still have with us Mrin Agarwal, and we are talking all about new categories of funds. And before the break, we discussed business cycle funds. You were speaking about dividend yield funds, and also what's your take on thematic funds. So let's take that discussion forward. You know, Mrin, gold has also been doing well. We are talking about new highs in gold. What is the best way to add gold to your portfolio? And since prices have run up the way we have seen, is this a good time to get into this category, or there should be some sort of waiting period before we do that?
Yeah, so I mean, that's a difficult one to answer. But when we look at how, gold has, of course, done really well. And of course, that's driven by all the global economic concerns, the high inflation, and of course, central banks buying gold, consumer demand as well in India, which is never ending, right? I think it's very difficult to figure out when to really buy it. Of course, it's gone up. So, for those who are entering it right now or who are looking at investing into gold right now, certainly need to keep in mind that they're investing after there's been a significant run up, and obviously then they need to have a longer term holding period. I think a couple of other things is that, of course, physical gold is a complete no-no given the making charges that are there. Secondly, gold ETF has now become taxable from April 1st. So I think the best bet, and considering that you're investing right now, the best bet then really works out to be the sovereign gold bond scheme, because it has that 8-year lock-in, so that keeps you invested. And at the same time, the returns at the end of 8 years are going to be completely tax-free. So I think the way to really approach it, of course, as always, ensure that your allocation to gold is about 15%. And in terms of where to invest, look at the SGB.
Okay, sovereign gold bonds and maybe a 15% kind of exposure. Mrin, you were saying that physical gold is absolutely not the place to be. Just right now, we were talking about how because of this 2,000 rupee note withdrawal, a lot of people are rushing to jewelers. They're buying gold coins or, bars, things like that. But I'm glad that you put that warning out. The other space I want to ask you about is silver, because there are periods when silver also shines quite well, but it's definitely not as steady, right? Do you think it's worth getting some amount of exposure to silver?
No, I don't agree, because first of all, silver, I think prices are really driven by the industrial demand. And second thing, I think silver prices are much more volatile than what gold prices are. Again, when you look at the returns on silver, I mean, just a simple 10-year CAGR, you see that gold has given almost double the returns than what silver has given. And again, silver returns tend to be extremely lumpy. And when you look at certain period returns, the returns are extremely low. So again, the other thing that I also see in silver is that it's highly correlated to the Nifty. So, because the silver prices move based on industrial demand, which basically moves on how economy is doing, right? And again, given that bit of correlation between Nifty and silver, if somebody is really looking at investing into silver, they're really not going to get huge diversification away from Nifty.
Okay, so that is your take on silver and gold. Important investing advice here as well, because there's been a lot of flow fund that we've seen in these categories as well. Now let's talk about the mid cap and the small cap category, because that is something that has seen massive flows, especially the small cap side. No outflows across the last 12 months in that category. Mid cap index did well as well. While large caps, they have seen quite the fall in inflows. What do you think would the current setup be? What are the good bets in this case in order to generate higher alpha here?
So I think it's a good thing. I'm really happy to see this flow into small caps and small cap funds. Because again, when you look at the SPIVA report or any report that talks about active versus passive, I think that's one category, the small cap funds, where you have a good amount of outperformance versus the passive funds. And again, if you are invested for the long term, which is, let's say, 10 to 15 years, then I think that this is a very good category to be in, provided that you're aware that it comes with huge amount of volatility, and you just need to remain invested through that volatility. So again, when you look at rolling returns over longer term periods, you do see a significant amount of outperformance of small cap versus mid cap and large cap. And I think to that extent, it's good to hold large cap through index funds, but I think where mid caps and small caps are concerned, certainly I think look at some of the consistently performing actively managed mid and small cap funds.
Okay, got that. Mrin, so far with our conversation, you've said no to the dividend yield fund. You've said no to the business cycle fund. You're saying sector thematic funds, not unless, you're definitely quite well versed with the markets. So if you're saying that, stay away from all of these sectors and themes which are emerging, which are hot during periods and not, what do investors do now, and what are the funds that you think are short bets that someone can add to their portfolio? Also, if someone is watching you now and they do have sector thematic funds and maybe they're pretty new into the markets, what should they switch to?
Yeah, this is a common problem that I see investors having a lot of sector and thematic funds because of the NFOs and everything. So I think, the first thing is that you really need to see what is the percentage allocation across your portfolio to these particular funds. And if if let's say you have 4 funds and out of that 2 of them are sector and thematic funds, then certainly you need to do some amount of changes. So look at what is the percentage allocation in your portfolio to these particular funds. At best, it should be about 5 to 10% of the portfolio. And that too, if you understand this particular sector or this particular theme, not driven by narratives that you read about, right? Now, if you feel that, okay, you don't understand this and, you feel that, okay, this is not the sort of risk that you wanted to take in your portfolio, then I think it's still a good bet to basically exit and reinvest in broader based funds like, for example, flexi cap funds, right? So that's what I would really suggest, that go and have a look. So again, for example, let's say you invested in a healthcare fund in 2020, which has not necessarily done so great. You might want to have a relook and say, okay, this is a category I don't understand. I don't know how it's going to do in the future. Let me just stick with a broad-based category. So it's really a question of, are you comfortable with it? Are you comfortable with the volatility in this category or not? And if you're not, exit. If you are, then remain invested, but you should not be overexposed to it.
Oh, yes. So it's different strokes for different folks, right? Because the risk parameters, the period of holding anything, and of course, the returns that you're expecting from a particular category differ from individuals to individuals. So we need to take into consideration of a lot of things. And that takes me to the next question. Any other things you feel mutual fund investors should check on in their portfolio? We have so many options in the markets, right? Someone who's holding something, what should be the regular exercise they should be undertaking?
So I think, one thing is that look at what is your diversification. A lot of times I have seen investors having funds either of the same category or funds from the same fund house, right? So they'll have large cap, mid cap fund from the same fund house, right? And there could be some amount of overlap of stock, style of management and stuff like that. So I think it's really important to have diversification among the subcategories and among fund houses as well. Of course, just stick to 4 to 5 funds. You really don't need more than that in the portfolio. So an index fund, a mid-cap fund, a small-cap fund, flexi-cap, these are the only 4 funds you actually need in the portfolio. You don't need any of the other funds. And you can keep your, portfolio really nice and simple and easy to manage with just these 4 funds. And of course, my parting thought, no NFOs.
No NFOs. I've heard this from you before as well, but good to drive home that point. Mrin, just one final question before we let you go. A lot of these funds that you mentioned, say a flexi cap fund, just an index fund, these are available across AMCs, right? If someone is trying to pick, because it can be very confusing for a new investor, if the same category of fund is available across AMCs, how do you pick which one? Of course, there can be more than one, which seems like a suitable fit, but how would you assess the AMC or the fund manager here?
Yeah, it's kind of difficult for most people to really do it. And of course, you need to look at rolling returns over longer term periods, which is at least 7 years plus. And you need to look at a whole lot of other factors, which honestly is quite difficult for people to do. So I think there are a couple of, the money control MC 30 list that is there, I think is a good go-to as well. Or you can look at Morningstar as well. They have a nice tool where you can filter out funds, but essentially you do have to look at long-term consistent performance as a starting criteria.
Okay, so a couple of important points mentioned by you, Mrin. Thank you so much for that. Definitely a masterclass for anybody who's starting afresh and also who already holds certain categories and what they should be doing with it going forward. Thank you so much for joining us today. And with that, we'll take your leave on this edition of Mutual Fund Corner. Stay tuned for Closing Bell to take you through the last hour of trade. We'll take all the market action ahead.